A brand new cycle for the Japanese economy is in the making with a higher inflation to come and a weaker yen. When the Bank of Japan hiked interest rate for the first time in 17 years, the Japanese yen, instead of strengthening, it crashed. When the central bank increases its interest rate, its currency should appreciate because investors depositing their money will now earn a higher interest. And this should attract investors to buy into the yen, causing it to rise. However, the opposite has occurred since 18th of March. And what could be the reason the yen may continue to sink further despite a potential rate hike in the future? My name is Kon Hao. My work in this channel, as always, is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. And before we get into the subject, please do take some time to read into the disclaimer. And why do I suspect that the Japanese economy is entering into a much higher inflation and a weaker yen despite of higher interest rate? And let's try to understand about QE, quantitative easing, or the printing of money. And the US did not invent QE, the Japanese did. And that was in March 2001. And of course, we all knew that the Japanese economy entered into a period of deflation for a long time. And when it was being introduced in March, and we saw that the inflation went up. But unfortunately, because of the US financial crisis, it affected the whole world, and the Japanese economy went into deflationary mode again. And then in March 2013, they introduced easy money policy. So basically, it's a double down of QE, means that a more aggressive mode in QE, or another term, they term it as Abenomics. So it did help very quickly. We saw that the inflation rise to about close to about 4%, but very shortly it dipped back down to deflation mode again. And something happened to '08 crisis, and because of QE started by the Japanese, and we know what happened in '08 crisis. It started with subprime crisis, followed by Wall Street meltdown, and then with Lehman crisis, and it was really panic back then. And US introduced QE 1, 2, and 3, and it did help. And the rest of the world kind of also follow their each of their own QE style. So it did help. And but that lead to another problem here, where printing money is always a harmful thing. If we prolong it for too long, it causes a deflation in currency, and it also lead to inflation. So, and then what happened was COVID, and post-COVID, the whole world entered into a global inflation in 2021. Starting from there, and finally, the Japanese got what they want. Inflation is on the rise, and it seems to be staying there. And on 18th of March, the BOJ announced that they're going to end their decade-long of easy money policy. And I do believe that Japan is in a checkmate position because their economy has just entered into a brand new cycle of a higher inflation and a weaker yen. And there are two key reasons attribute to that. And number one is that the currency carry trade. This is an investment strategy involves borrowing money in a currency with a low interest rate and investing into a currency with a higher interest rate. However, this option is no longer available to institutional investor, which is likely to further weaken the yen. And number two is the debt to GDP ratio. Japan has the highest debt to GDP ratio in the world, which is a ticking time bomb. The inflation that Japan has been anticipating for decades has now begun. And debt to GDP ratio, we have to understand that it's always good to borrow some money. If you find that it's too complex to understand, let's dial back at the individual. If you are 20s, 30s, it's always good to borrow and buy house and get into some debts. But when you enter into 40s and 50 years old, you enjoy the fruits, it is also time to contract back on the debts. And that's what I mean. We have to enjoy life a little bit more. But what the Japanese did is they got into perpetual debt. And that will lead to a problem because As you print too much money, your currency will be diluted. As your currency get diluted, then inflation will kick in. So therefore, I suspect that the Japanese economy is entering into a period of high inflation to come, but yet, which I explained, because of the currency carry trade, the currency is going to weaken further. It's a very unusual situation here. We could use the Japanese yen as a hedge. And even going to size it down further, so technically we could see that, in fact, it's at a very critical point right now for the Japanese yen. Is hitting its crucial support, and it seems like it's breaking as of now. This is a daily chart. While many of us may be considering investing into the Japanese assets and stocks given its inflation to come, which is good, so please also manage the currency risk, which you do not want to be caught in between profiting from its assets and losing out on its currency. Stay tuned for my coming tutorial. Remember to subscribe to my channel. The market are always telling us on their next move. Join us in our weekly case study and discussion. Click on my profile icon to find out more. Feel free to leave me any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.